Good morning, everyone. Thank you, Torrin. Thank you, Kim. My name is Taliba Bales, and I'm the founder and CEO of TNB Tax and Financial Services. And we have some really awesome information for you today. And so I'm going to jump right to the panelists because that's what you're here for, our guest speaker. So we have Mr. Rod Perkins. He is of the SBA. And he has been with the SBA, I think about 12 years, Rod. I don't want to call you out or get anything wrong, but I want everyone to understand that Rod is a true resource. And we want to thank Rod for making himself available and for sharing the nuggets of information that he'll be sharing with us today. So SBA, lending specialist, economic development, here in Alabama, but of course, we're going to be talking about federal programs. So this is going to be applicable to those of you who have joined us outside of the state. Rod, I'm going to toss it over to you.
Okay. Thank you so much, Taliba, and thank you, Torrin and Kim. I'm very appreciative of the work that you do serving the small business community and the community as a whole. So it's just kind of an honor to be here, to have this dialogue, to share information, with the community. The information is vital. It's important that, we get the information out there, and it's important that we ensure that the information is being utilized to help our small business community in general, and in particular, the minority business community. I feel very passionate. I really feel that this is my calling to provide this service to the community. I started a business. I started a nonprofit. I spent a number of years in banking. I worked as a commercial lender, commercial underwriter. So I underwrote, small business loans. I underwrote large commercial deals. And so I think, I've been equipped with the tools really to work and to help small business owners. So it's just kind of an honor being here today. So thank you. So I'm going to go ahead and pull up. Let me know if you can see. I'm pulling up my slideshow, my presentation. Can you see that? So I'm going to go ahead and get started. I'm assuming you can see that. The first thing I want to basically, I think, clear up. I mean, there's been a lot of dialogue, about the economic injury disaster loan advance, and I think, right now we're at a point where, the issue of the day is forgiveness, and so the business owners are going to the banks to apply for forgiveness. The banks are reviewing that information and they're submitting information to SBA, and SBA is actually, forgiving loans. So we're actually active in the process, and SBA is responding. I think I've heard a lot of dialogue about SBA not, really going to respond within 90 days. And so the way the process is set up, the borrower will go to the lender to submit their application for forgiveness. And the lender would have 60 days. They have 2 months to review the information. And then before they have to submit it to SBA. And once SBA gets the information, they will have up to 90 days to review the information. But I think that process is going well. I've gotten a lot of calls and emails from my bankers saying that, SBA has forgiven, some of the loans that they've submitted already. And then that's another issue that they have is that, it's not 100% forgiveness. That's a balance that remains on the PPP loan. And so I just want to spend a few minutes kind of clarifying the economic injury disaster loan, versus the economic injury disaster loan grant/advance. And what you have on the screen here is an official Sba Disaster Declaration, for Hurricane Sally. And so parts of Alabama were impacted by that disaster, by the hurricane. And you can see here, the counties, basically South Alabama, the counties of Baldwin, Escambia, and Mobile counties. This is a federal disaster, so they're eligible to apply for disaster assistance from SBA. And that's a direct loan from SBA to the individuals affected by the disaster in those counties. So there's no bank involved in that process. The economic injury part, it relates solely to the small business community that are impacted by this disaster. So you can see here, the physical damage, which is something that's immediate that we can see. And so typically, SBA, we give the those who are impacted by the physical damage. It could be individual homeowners, and it could be, small business owners. Their commercial building could be impacted by Hurricane Sally, by any disaster. And so we typically give them a couple months to apply for a physical damage loan. And so you can see the Hurricane Sally impacted the Mobile area between September the 14th and the 16th. And so we opened the door to apply for physical damage for individuals and businesses. So they have until November the 19th to apply for a disaster assistance. Now, the economic injury part, that's something that's not really immediate. It can be immediate if you're a business owner and your commercial building is destroyed. Then obviously you're going to experience economic injury immediately. And so you may have some business owners, they may be 2 or 3 miles away from the actual disaster site, and they may experience no physical damage. And it may take, 3, 5, 6 months before they recognize that they're experiencing economic injury, which is basically a loss of business. And so we give them a little longer time to apply for direct assistance from SBA. And so for economic injury, for this particular disaster, the deadline is June 21st, 2021. So we give them, really, I think 9 months, maybe up to a year to apply for disaster assistance. And so that would be the economic injury disaster loan, which is a direct loan coming from SBA to the business owner. And so you can see, the types of disaster loans available: the business physical disaster loan, I mentioned that, as well as the economic injury disaster loan and the home disaster loan as well. Now, one thing I want to point out with the, disaster loan in general, physical damage and economic injury, there is a credit component tied to that. There's an underwriting component. And with the Ppp loan program itself, there was no credit underwriting required. So there was no pulling the personal credit reports because there were no personal guarantors. And there was no collateral analysis because there was no collateral that was required as part of the Ppp loan program. But the economic injury disaster loan or physical damage disaster loan, there's a credit requirement. So we will look at credit report. We will assess their ability to repay the loan. We will look at do some collateral analysis. So I wanted to point that out. With the economic injury disaster loan advance is really unrelated to the disaster loan program. And so essentially, I think the money from initially, it was the economic injury disaster loan grant for $10,000. That kind of evolved into the economic injury disaster loan grant for $1,000 per employee up to $10,000. And then it finally became the economic injury disaster loan advance, which in essence, it becomes a loan. And so a lot of my bankers, I talked to one of my bankers, he said he submitted 13 deals and SBA responded, for forgiveness. And all of the deals, they experienced forgiveness, but there was a balance on each one of those loans. And that balance, constituted the economic injury disaster loan advance. So the business owner will have to pay that EIDL advance back. So I want to ensure that they understand that if they got an economic injury disaster loan advance, then they will have to repay that loan back. Now, the economic injury disaster loan, it is a loan, amortized over 30 years, and the maximum loan amount is $2 million, for the EIDL loan. That's the actual loan. The advance is really, it has to be paid back. It's going to reduce the PPP forgiveness amount. So I want to bring some clarity on that. And I know that's the issue that's going to come back up during this discussion. One other thing I want to note, there's some ongoing dialogue about the forgiveness of debt, and I'm not a tax attorney or tax professional, But the forgiveness of debt, I mean, it triggers a tax consequence. And so I think the IRS, issued this notice, and I don't know the date of this notice, but they issued a notice saying that, there'll be no tax consequence for the PPP loan that's forgiven. And at the same time, there will be no deductibility of those expenses that were paid by the PPP loan. So if you look at your income statement, and I'm not an accountant, if you look at your income statement, you got a payroll expense. I mean, that's a deductible item. You got, the rent expense that's listed on the income statement. That's a deductible item. You got utility expense. So those items would not be included in the income statement. Now, the only issue is the timing issue. Most folks were thinking that, SBA would not start forgiving loans until next year. Well, they're forgiving loans right now. And so the issue is, you got the PPP loan in 2020. And so even if your loan is forgiven in 2021, the question becomes, when do you, exclude those non-deductible items from your income statement? So I don't have the answer to that question. Some say that, the PPP loan was made in 2021. So those expenses will be, excluded on your 2021 tax returns, even if the PPP loan is forgiven in 2021. So I don't know the answer to that question, but, my point on this slide is to let you know that the forgiveness part will not be taxable. At the same time, you lose that deductibility. The business owner loses that deductibility. I can't really speculate on really what's going on in the House and the Senate, in terms of a new stimulus package, specifically as it relates to the PPP loan program. But I can say that there's a lot of ongoing dialogue, within the community. And so I just put a couple of points here just to kind of mention, what kind of dialogue is taking place within the community as it relates to PPP and and how the PPP program will look under a new stimulus plan. Now, I don't want to speculate, but I'll just, go through this slide just to kind of mention the dialogue that's taking place. The first item is expanding the use of the PPP loans. The PPP loans limited for payroll, rent, utilities, and interest on mortgage. And the biggest issue is the payroll issue. I mean, that's the initial intent of the program, is to keep people employed. And so there's discussion about not limiting the use of the PPP loan, just having it used for just general operating expenses. So I don't know where we are, or, we don't have a deal on the table. So I don't know how everything's going to pan out, but that's part of the conversation. The second item is simplifying the forgiveness process. And I think most lenders, they're putting their forgiveness process on hold. I mean, it starts with the business owner coming to the lender to apply for forgiveness. And so the lenders are saying, okay, let's just hold on for just a second, because they're anticipating a blanket forgiveness for PPP loans up to $150,000. And so, I don't know how that would look. It may be a situation where the business owner would essentially do an attestation, sign a one-page document saying that they followed the rules, they used the money for intended purposes. If there's any kind of fraud or misrepresentation, then SBA will have authority to bring criminal charges or civil charges. And, and so they're attesting to the fact that they followed the rules and they used the money for the intended purpose. And so they would submit that form to the lender, and then there will be a blanket, there'll be a forgiveness of $150,000. Now, and I guess I'm speculating, I don't know how that really would look, but that's an issue there. And a lot of lenders, they're on hold in terms of the forgiveness process. And we shouldn't get it confused with the new 3508S form, the simplified version. That's not blanket forgiveness. So you still have to provide, certain documentation, for loans of less than $50,000. Okay, so that's not blanket forgiveness. We'll talk about that in just a second. Item number 3, the future of PPP loans. The program expired on August the 8th, And there was actually, roughly $130 billion still left in the program. And so people were trying to figure out, why did we have $130 billion left in the program when there's still a significant need or demand, for help by the small business community, and in particular the minority community. I don't have to answer that question, I don't want to speculate, but I think, some of the larger lenders, they may have set some internal limits in terms of, the number of PPP loans, they would do, or the dollar amount of PPP loans that they would do. Then in some cases, as one of my colleagues said last week, it may be a liquidity issue. And the liquidity issue is really for the, Certified Development Financial Institutions, the CDFIs, and some of the credit unions and some of the smaller community banks. So they may have a limitation in terms of, having the money to lend, because you have to lend the money up front, and then you have to go through the forgiveness process to get the money back. So you have to have capital to lend. So it may have been a liquidity issue. I don't know. But the dialogue, the conversation is that, there will be a new PPP program, and the program will be capped at $2 million. So I think initially it was a $10 million cap. So we're going to cap the program at $2 million. Now this is dialogue that's going on, conversation that's taking place in the community, and this is not what's going to happen, in the House and the Senate, so we don't know how it's going to look. I don't know how it's going to look, once it's been approved. Item number 4, second PPP loan. So there's dialogue about allowing small business owners to apply for a second PPP loan. I think initially, the focus was really on payroll, and that was the intent of the program, to keep people employed. And so there were some non-payroll items, the rent expense, the utilities, and so a lot of business owners, they missed out on having some funding to cover their rent expense or their utilities. And so once they were approved for the initial PPP loan that essentially covered the payroll, they wanted to come back and apply for a second loan. They actually wanted an increase in their PPP loan to cover rent for a couple months or cover their utilities. And we didn't allow a second PPP loan, and we did not allow an increase in an existing PPP loan. So there's some conversation about the possibility of business owners that already received a PPP loan, they're having the ability to apply for a second PPP loan. Item 5, which I just kind of touched on that, they may have the ability also to increase, if they got an existing PPP loan, they can increase that PPP loan. The last item, modifying the payroll requirement, and as I mentioned, initially it was 75% of the funds had to be used to cover payroll, and then it dropped down to 60%. And so there's some dialogue about eliminating that requirement altogether. The last item, the Eidl grant advance, there's some dialogue about additional funding for the advance, the grant, and I just spent a lot of time talking about the Eidl grant advance. I mean, essentially it's a loan. So I don't know if that's something that's going to still be included as part of a potential new stimulus deal as it relates to PPP, because my bankers, and I expressed, and I want to be transparent with you, and I expressed my concern about additional PPP funding. My bankers, I mean, they're a little concerned because there's a balance left over, and that balance represents the Eidl advance grant that the borrower has to pay back. And so it took a lot of bankers by surprise, and I'm not 100% sure if, the majority of business owners, understand that Eidl advance will have to be paid back. And so now I'm trying to be proactive and getting the word out and ensuring that the business community understands that if they got an Eidl grant, Eidl advance, then it will have to be paid back. And then I'm not sure the conversation, about initially it was an Eidl grant for $10,000, then an Eidl grant for $1,000 per employee. Now, if that business owner did not apply for a PPP loan, because the Eidl advance, if you apply for a PPP loan, we're going to reduce, SBA is going to reduce that PPP forgiveness amount by the Eidl advance. Now, if you did not apply for a PPP loan and you got an Eidl grant / advance, then I think that may represent a true grant, which does not have to be paid back. And so, if you got the PPP loan, and I think, what SBA is really communicating is that the Eidl advance or grant is a grant, and the PPP loan, forgivable loan, is essentially a grant as well. And so we're not going to give you two grants. And so that's why we're reducing the Eidl advance. We're reducing the PPP forgiveness amount by the Eidl advance. So eliminating the other grant. So we're not going to allow two grants. I think that may be the justification for that. This particular slide, I decided to keep, in this presentation. And essentially, the point of the slide is to I looked up certain zip codes in the Birmingham market. And, I know the audience is, extend, outside of Birmingham, outside the state of Alabama. But the intent is to identify, I want to see the number of PPP loans made in, say, the West End area, zip code 35211. And all of these are essentially underserved markets. And so in 35211, which is my favorite zip code, there were 218 PPP loans made, in that zip code, within that zip code. And there were actually 189 where the money was actually dispersed, that were actually, funded. And so we're looking at, roughly, $34 million. And so I looked at the number, of PPP loans within that zip code that were less than $50,000. So I want to get an understanding of what percent of those loans are less than $50,000. And so roughly 60% of those loans in 35211 were less than $50,000. And so that means that, the majority of business owners within that zip code can use the new SBA 3508S simplified form, simplified application for forgiveness. And so I kind of took it a step further, just looking at that last column, and trying to determine the percent of PPP loans that were less than $150,000. And so roughly, 81%, in zip code 35211. So if there is a blanket forgiveness on PPP loans less than $150,000, I think the majority of the business owners in the West End area, or the 35211 zip code, will have blanket forgiveness. And so that's the intent of this slide. Now, what I did probably a month or so ago, I calculated the same information for certain zip codes that were in suburban Birmingham, that were outside of the Birmingham market. And at the time, I looked at the percent that were less than $150,000, and 90%. Now, I don't know what that means. I'm not kind of turning this to like a black-white thing, but 90% of those loans were, in essentially 5 zip codes in the suburban area outside of Birmingham. 90% of those loans were less than $150,000. So the issue of the day is forgiveness. I mean, that's the issue of today. And so, and I was going to use the word, we evolved in terms of the application for forgiveness. So it's not an evolution. Each of these forms exists, and each of these forms have to be used. So initially, we had the 3508, which is the full application. And so basically, and I have a copy of the 3508S, which is the latest, the newest application for forgiveness. And I don't have copies of 3508 and 3508EZ, but essentially, the 3508 is the full application, which has the basic data, the application data, and it includes the forgiveness calculation and the representation and certification, which basically saying, the business owner initial certain items, and they sign the form saying that they follow the rules, they use the money for the intended purpose. And then you got the Schedule A and then Schedule A worksheet where you're really you're calculating the forgiveness amount of the loan. And so you still have to go through that process and calculating that. The PPP borrower demographic information, that's kind of a touchy issue, I think, even for me, because initially, I think it was mandated that we include borrower demographic information on the initial application, race, gender, veteran status, and so that information was not included. And so I think we're coming in on the, and I'll say the back end, and including a form that we're saying to the business owner that it's optional, which, I have my view about that, but it should be mandatory. And that way, I'm able to go into the system and identify, or SBA is able to go into the system and identify how many PPP loans were made to women business owners, how many PPP loans were made to minority business owners, how many PPP loans were made to veterans. And, I value each of those groups, and, I spent almost 25 years in the military. So I value, the veteran business owners, I value the minority community as well. So the 3508 EZ form, which essentially, now I have here easy application and I have full form. So what does that mean? So to me, you still, in order to calculate, you got to report the forgiveness amount on the 3508 easy form. Now, actually, you have the forgiveness amount calculation that you have to submit to the lender. The business owner has to submit to the lender. Now, you don't have to complete. I put full form on here because I think you still have to go through the process of calculating the forgiveness amount. So you still go through that process, but you don't have to submit the full form, all the information to the lender under the 3508 EZ form. So you have the forgiveness amount calculation. So you had to go through the process of calculating the numbers, and then you still had a representation certification. And then there's certain documentation that you have to submit. You're essentially verifying, the payroll and non-payroll items, that you spent the money on during the covered period. So you just have to, whether it could be canceled checks, bank statements, you have to show evidence that you spent the money on those, payroll items and non-payroll items. And the demographic form is still included as part of 3508 EZ. Now, the latest form, the 3508S, the simplified version, and I got full form here. So, you still have to go through that process of calculating the forgiveness amount, but you don't have to submit that information to SBA. So you still have the basic data, the application, and you have the representation and certifications, and then you have the documentation verifying, the payroll and non-payroll items that you spent the money on during the covered period. And so I got a couple slides of a picture of the 3508S, so we'll kind of talk about that. And one key thing with the 3508S is the exemption. And so the cover period, if you look at the 3508S form, there's no line item for the cover period. Now, the cover period, you get your money is dispersed. As soon as you get that money, you have, 8 weeks or 24 weeks to spend the money on payroll, non-payroll items. The exemption, for the reductions, now during that covered period, you're required to maintain a certain head count or FTE, full-time equivalents, and you're required to maintain, certain salary and wages during that covered period. Now, if your FTE, your full-time equivalents, your head count is reduced during that covered period, then without a justifiable reason, then the loan forgiveness amount will be reduced, and then you'll have a loan to repay. And that applies to the salary and wages during the covered period. So if it's reduced by more than 25%, then you potentially could have a reduction in the forgivable amount of the loan. And so that's not applicable to the 35-0S. There's an exemption. So that process, the borrower does not have to go through that process, of maintaining, head count or maintaining a certain salary level, a wage, because that's exempt for the 35-0S, 35-08S. And so here's basically, what I'm calling section 1 of the 35-08S. And it's a simple application. And basically the basic data, you got your name, the business address, tax ID number, your phone, contact, email address. And so you have the SBA PPP loan number, then the lender's PPP loan number, and the PPP loan amount, and the disbursement date. And that's the date that you received the money. And then SBA wants to know the employees at the time of application, employees at the time of forgiveness application. Now, here's the EIDL advance amount. Now, some business owners, they may, have that amount. The maximum loan amount for the EIDL advance will be $10,000. So if there's an amount that's more than $10,000, then it's likely an EIDL loan, disaster loan. So if you see an amount more than $10,000, then you want to kind of question that. So the maximum will be $10,000 for the EIDL advance. And again, the EIDL advance was served to reduce the PPP forgiveness amount, and it becomes a loan that has to be repaid by the business owner. And then you got the forgiveness amount. Like I said, you still have to go through the process and calculate the actual forgiveness amount of the loan. And as I mentioned, there's no line item for the covered period. So the 3508 has a line item for the covered period. And I think the 3508EZ may have a line item for the covered period as well. But there's no line item for the covered period for the 3508S. And so this is section 2, which is basically, representation and certification, where the business owner would initial each of these line items, and they would need to read each line item and initial. And basically, just to summarize it, it's basically saying that, you use the money for the intended purpose. If there's any kind of, misrepresentation, intentional misrepresentation or fraud, then SBA can come after you with criminal charges or civil charges. And then it says that, you acknowledge that the SBA can request information at any time. Now, I know it's been communicated that loans of $2 million or more, SBA will review. I was going to say audit. I don't want to use the word audit. They would review, those loans. Now, that does not mean that loans less than $2 million, SBA would not review the loans. And it doesn't even mean that, with the 3508S, loans less than $50,000, the SBA would not review, a $50,000 loan. I mean, they have the right to review, and that's what we're getting the business owner to understand. We got a right to review, and they have to maintain the documentation. They submit a limited amount of verifying information for the payroll and non-payroll items. They spent the money on during the cover period, but they still have to maintain documentations for at least 6 years, because SBA could very well come back and request that information, request to view that information. So they initial off on this form and they sign the form. And this form here, section 3, it relates to the demographic information. And you can see here at the bottom, it says it's voluntary. And so I encourage, the business owners I talk with, the bankers, to, have this information filled out. I think it's something that we need filled out in order for us to really be proactive, really going forward and trying to help underserved markets. And we need to be intentional in helping underserved markets. And so I know the feeling in the community is that a lot of the underserved businesses were left out initially. And that was a situation where the banks kind of catered to number one, their existing customers who may have had large deposit bases. And so once they served those, and I don't want to speculate, but once they serve those, the larger clients, the clients with, good deposits, and then they kind of cut it off because they reached their limit, maybe in terms of the number of PPP loans or the dollar amount of PPP loans, and they stopped accepting applications. And so you got a lot of the smaller businesses, the underserved businesses were essentially left out, of the process. And so I think we need to be, proactive going and intentional going forward and reaching out to underserved markets. And so this slide here, this calendar, essentially, what I'm trying to convey with this calendar is that, a lot of the small business owners, when lenders initially approved the PPP loans, they had to set a, repayment date, a first payment due date. And so a lot of those lenders had, October and November, as the first payment is due October, November. And so that was a note attached to that. And so the business owner signed a note, and the note said the first payment is due October or November. And so I want to, let the business owners know that really they're not required to make a payment, even this year. Now, if they submitted an application for forgiveness, to the lender, and the lender in turn, reviewed it and submitted to SBA, and SBA responded, and SBA has responded. So there are loans that have been forgiven, and SBA respond to the lender, and they say, well, that's a $10,000 balance. We forgave, it's a $100,000 loan, we forgave 90%, and that $10,000 represented an EIDL advance. So that has to be paid back. And so now, the bank has to term that loan out, over either 24 months or 60 months. And so the first payment will be due within 30 days. So it could be a situation now where, and I know a banker I talked with, last week, he had 12 loans or 13 loans that had balances. And so he got, communication back from SBA last week. And so, 30 days from last week, that's still this year. And so the business owner will have to start making payments, within 30 days. So you could, start making payments this year, but for the most part, you have, up to 10 months from the end of the cover period. And so this calendar, so we assume, April the 20th, we got the money. And so as soon as the money was dispersed, that's when that cover period starts. And so for an 8-week cover period, that ends June the 14th. And so at the end of the cover period, the business owner has up to 10 months to go to the bank to apply for forgiveness. Now, if they don't go within 10 months, so if month 11 comes around, they had not gone to the bank to apply for forgiveness, then they're going to have to start making payments. The bank will have to term out whatever the balance is on that PPP loan over either 24 months or over 60 months at 1% interest rate. And so they're going to have to start repaying that loan, in month 11 if they don't, go to the bank within 10 months. And so that's like an 8-week cover period. And so if there's a 24-week cover period, if you got the funding on April the 20th, and so that 24-week will end October the 4th. And so you got up to 10 months from October the 4th. The business owner has up to 10 months from October the 4th to go to the lender to apply for forgiveness. So, it depends on the business owner, if they want to wait. And I think a lot of lenders, they're still waiting, on some additional guidance in terms of having that blanket forgiveness for loans up to $150,000. And that would make the process, much more simplified for the lenders. Because like I indicated, the majority of those loans, more than 50%, in some cases more than 80%, the PPP loans are less than $150,000. And so the point in this slide is to get the business owner to understand that you really, even though that note that you signed may say, the first payment due October or first payment due November, you really have up until 10 months from the end of the cover period to go to the lender to apply for forgiveness. So I just want to point that out. The 3508S instructions, I encourage you to read the instructions. The only comment I will make here, and I mentioned this previously, is the exempt, the borrowers that use this 3508S exempt from reductions in loan forgiveness amount based on, reduced headcount or based on a reduction in salaries or wages, more than 25%. So that's not applicable for the 3508S. So that's not a requirement. The required documentation, that the borrower has to submit to the lender. Now I'll say this, the borrower is required to maintain all documentation, whether it's, Schedule A worksheet and them determining the forgiveness amount, even the initial application for a PPP loan. They're required to maintain all documentation, and they're required to maintain that documentation for at least 6 years, because SBA could come in at any time and say, we want to review this information. And so for the 3508S, the required documentation, which is essentially the same for the 3508EZ, the borrower is required, in addition to the application, the 3508S application, they're required to submit documentation verifying, the cash compensation, non-cash benefit payments, basically the payroll costs and the non-payroll costs. And essentially, it could be, bank statement, it could be canceled check. I mean, if you're a sole proprietor, and you have your net income and that money goes into your business account, and so you want to pay yourself, I mean, you cut a check from the business account, I mean, that's evidence of payment there during the covered period. Or if you may have a direct deposit, or you may do online banking, so you have to show the evidence that you spent the money on those payroll items and even non-payroll items during the covered period. I had a banker asked me if submitting a Schedule C was sufficient documentation. And I said, well, the Schedule C, and I assume he meant the Schedule C for 2019. So the Schedule C in itself, it's going to show the net income amount, but it's not going to show payments made during the covered period. So the answer to that question was no. And so I'm going to limit the required documentation to what's stated, in the instructions. So I encourage you to read the instructions. And I kind of touched on this, the borrower is required to maintain all documentation, for at least 6 years, because as I mentioned, SBA could come in at any time to request review that information. And so that's, 6 years is the timeline for maintaining all documentation. That and this is a transition point, and so that was kind of where we are on the PPP. The biggest issue of the day is the forgiveness issue, and within the forgiveness issue, I want to say a bigger issue, but within the forgiveness issue, the Eidl advance becoming a loan that has to be repaid. So that's kind of an issue there, and I know some of the trade associations. I think the American Bankers Association, they're probably having dialogue with some of my colleagues in DC, and National Credit Union Administration, they're probably having dialogues with some of my colleagues in DC about the Eidl advance becoming a loan that has to be repaid. And so at this point, want to talk about SBA and just provide some general information on SBA and how we're structured in the loan program. And I work in the lending division for SBA. So my primary role is to work with the banks to get them to lend more money, work with the lenders, banks and credit unions, to get them to lend more money to small business owners, utilize the Sba Guarantee loan program. And so we have the way we're structured in each district office. Every state has a district office, SBA district office, and we're pretty much structured the same. We have a counseling division, which is basically our resource partners. And so we rely heavily, especially in Alabama, we rely heavily on our resource partners because we have limited staff. We only have a handful of staff, but we're responsible for the entire state of Alabama. So we have the small business development centers, about 10 in the state. They're affiliated with the major universities in the state, so they get grant funding from SBA to provide that service to the community. So they provide free business counseling and free business assistance. We have, that's the small business development centers. We have the women's business centers. We only have one right now, and they're in the Huntsville market. At one point, we had one in Birmingham, and we had two actually in the Mobile market. So we're down to one women's business center. We work with a group called SCORE, the Service Corps of Resource Executives. They changed their name. It used to be the Service Corps of Retired Executives. So it's the Service Corps Resource Executives. I think there's about 5 or 6 chapters in the state. They provide free business counseling, free business assistance. We have a contracting division, where we work primarily helping small business owners do business with the federal government. I mean, there's certain certifications and there's a mandate when we talk about contracting. There's a mandate for federal agencies to do business with certain groups, women-owned businesses, minority-owned businesses, veteran-owned businesses. So that's a mandate for them to do business. And so we have, and then there's a hub zone firm, historically underutilized business zone. You go through our process, then you become a certified hub zone firm, and then we'll work with you to help you get federal contracts. The other certifications, we kind of use the word, self-certified kind of loosely, and that's for, women-owned small businesses and essentially veteran-owned small businesses. The access to capital, again, that's where I work in the lender relation division, and my primary role is to work with the lenders to get them to lend more money to small business owners. So that's essentially how we're structured. The lending program, access to capital. I talked about the disaster side of SBA, emergency recovery. I mean, that's a physical disaster loan, physical damage disaster loan. That's an economic injury disaster loan. Again, $2 million, amortized over 30 years. And I got at the bottom this Eidl advance, and I wasn't sure where to put that Eidl advance. I started to put it under that PPP program. And so, the disaster side of SBA and the guarantee side of SBA, it's two separate divisions. And so where I work, the guaranteed lending program, the guaranteed side of the house, we essentially have 2 loan programs. The 7A loan program. Now, there are a number of programs that fall under the 7A umbrella, but 7A is our primary loan program where we guarantee or back loans up to $5 million. And so that PPP loan program, which is a temporary program, that falls under the 7A loan program. The 504 loan program, that's our other guaranteed loan program. It's essentially a community and economic development loan program, and that's a job creation or job retention component tied to the 504 loan program. That's not a requirement for the 7A loan program, even though we do track, jobs created, jobs retained for all the 7A loans that we make. It's not a requirement. The 504 loan program, there is a requirement. So it's a community and economic development loan program. And let me comment on the blue box. It's Section 1112 debt relief payment, and that's something that falls under the CARES Act. And so essentially what that meant, and I don't know if we really did a good job in getting the word out about the Section 1112 debt relief program, because I don't know how many existing SBA customers benefited from the program, and I don't know how many new customers that receive SBA loans benefit from the program. But essentially, under the the program, really, it ended September the 27th, 2020. And so essentially, SBA will make, for any existing SBA loan, SBA will make 6 payments on behalf of the business owner. And so if you got a new SBA loan, from March through September of this year, then SBA will actually make the first 6 payments on your behalf. And so this is, I mean, it was very significant to me because it could be a situation where, the business owner may have, say, a $500,000 loan on a commercial building. It's a non-SBA loan. So the lender could look at refinancing that $500,000 commercial loan. And with SBA, our terms are a little more liberal than the bank's terms, meaning that, on a real estate loan, the bank typically will amortize that loan over 15 years. If they decide to do the loan with an Sba Guarantee, we'll allow them to go up to 25 years. So you're going to have a longer term on the Sba Guarantee loan. And then as far as the interest rate is concerned, you're going to have a lower interest rate because typically, the lenders, they do risk-based pricing. I mean, they're going to charge you a higher interest rate. They're assuming all the risk. And the purpose of the Sba Guarantee is to mitigate or minimize the risk. So if we got a $500,000 loan, the bank refinanced that loan with an Sba Guarantee. So we're looking at a longer term, and we're looking at a lower interest rate, and that translates to a lower monthly payment. So if you, and I'm just making up numbers, so if you got a $500,000, mortgage, non-SBA loan, and you're paying, let's just say $3,000 a month, and you refinance that loan with an SBA Guarantee, I mean, that could potentially cut that payment in half. I mean, you could go from $3,000, let's just say $1,000. You go from $3,000 to $2,000. So that's $1,000 a month in cash flow savings for you. And so to add to that, SBA will come in. Now this is under Section 1112 debt relief payment, which is no longer available. And I don't know if SBA has. I don't know if SBA is entertaining any thoughts of expanding this program. I don't know what kind of dialogue is taking place, but if you go from $3,000 a month to $2,000 a month, so it's $1,000 in cash flow savings, and then SBA comes in, and makes 6 payments on your behalf, so that's additional cash flow savings, and then SBA really has granted the lenders the authority to defer payments. Now, when we talk about deferring payments, now SBA make payments on your behalf, okay? And that's different from payments being deferred. And so payments being deferred, that means that, you can go, the lender can allow you to go, say, up to 6 months without making a payment. Now, they'll probably add those 6 payments to the back end of the loan. So eventually you'll have to make those payments. So, my point is you could eventually go up to 12 months without making any payments on that loan. And so you go from, mortgage, you're paying $3,000 a month. And then now it's a situation where, your mortgage has, your payment has been reduced from $3,000 to $2,000, but you don't have to make that payment until like 12 months down the road. So that's why I felt that was significant. And I don't know how good of a job we did in communicating that to the community and even to the bankers. And that's Section 1112, applied to the 504 loan as well. And we'll talk a little bit more about some 7A and 504 loans. We have a SBA microloan program. It's essentially it's a program for non-bank lenders where SBA will provide a loan to the nonprofit lender. Say, for example, we may, provide $1 million loan to a micro lender. And so the micro lender would take that $1 million and they will make micro loans. And those are small loans up to $50,000. And so the micro loan itself is not guaranteed by SBA. Okay, so essentially, since it's not guaranteed by SBA, that means that the micro lender is on the hook, if the loan goes bad. And so they're assuming all the risk, so you're probably going to pay a higher interest rate on the micro loan. And so they were also eligible for that Section 1112 payment, even though the micro loan itself was not guaranteed or backed by SBA. They were still eligible for the 1112 debt relief payments. This last item, Small Business Investment Company Program, I typically, when I do a workshop for small business owners, I mention this program and I kind of gloss over the program. It's basically a venture capital program where for every $1 the small business investment company puts into an investment fund, SBA would put $2 in. And so essentially that investment fund would be used to make, historically it's been equity investment in small business owners. So they would, purchase ownership interest in that small business, and the small business owner would get the capital they need. It would be equity capital. They would get the capital they need, but they had to give up ownership interest in the business. And so the SBIC, they still do, they do equity investment and they do debt investments as well, which basically means that they make loans. And so, and they can do a combination of debt and equity. And surprisingly, and I don't know if we really did a good job in promoting the SBIC program, in Alabama, but surprisingly, there are a number of SBIC deals that have been done, particularly in Birmingham, in the Birmingham market. And, you compare that to the Huntsville market. I think we have twice the Birmingham market. There's twice as many, probably more, at least twice as many SBIC deals that were done in Birmingham compared to Huntsville. And I found that to be a little surprising. But we do have this venture capital program, and it's an active program. And so that's an option for, the small business community if they're willing to give up ownership interest in their business. And I'll say this, the SBICs, with any venture capital, I mean, they're looking for a quick turnaround and a high turnaround, or they look for a quick turnaround on their investment and a high return on their investment. And so we do have an SBIC that's physically located in the Birmingham market. But I'll say this, and the reason I kind of gloss over the SBIC program, all the SBICs I've communicated with, their minimum investment is $2-3 million. So it's kind of out of reach for mom and pop. And I think I'm gonna kind of speed this up. I think I've been on maybe an hour. The 7A loan program, in a nutshell, the maximum loan amount is $5 million, and it comes with a 75%, 85% SBA guarantee. And so how the guarantee works is, if you go to a lender, you apply for, a $200,000 loan, the guarantee, for loans of $150,000 or less, SBA will guarantee back 85%. More than $150,000 will guarantee back 75%. So if you apply for a $200,000 loan, that comes with a 75% guarantee. And so if you're paying as agreed, and there's a downturn in the economy, it affects your business, we get the lender the authority to defer payments, up to 6 months. And so the lender, they're trying to work with you. They defer the payments up to 6 months, and you get to the point where you realize you're not going to make it. And so you decide to close the business. So what the lender would do, essentially, they would liquidate the collateral, they would sell the collateral, and whatever they get from the sale of the collateral, they'll apply that to the loan balance, and they'll get a final loan balance. And once they get a final loan balance, then the lender will come to SBA to get SBA to honor its guarantee. So we'll cut a check for 75% of that final loan balance. And so just kind of pay the bank off, and the bank would just write off 25%. And so that doesn't put the business owner off the hook. They still have to pay that money back. So SBA will work with the business owner to set up some reasonable repayment plan, and they will have to pay it back. That's how the guarantee works. And I mentioned our terms a little more liberal. Up to 25 years on real estate, 10 years on working capital, and 10 to 15 years on equipment. The 504 loan program, you have some larger deals, primarily, real estate and heavy equipment on the 504 loan program. And then I talked about the microloan program, loans up to $50,000, no SBA guarantee. So we're going to kind of move forward. I have a few more slides left. Sba Express loan program, let me just point out here, the guarantee on this program is $50,000, it's 50%. The maximum loan amount is $350,000. And I want to point out the Sba Express line of credit feature. And so essentially, you have it's called the Sba Express line of credit. It's a combination of a line of credit and a term loan. I think I really like this product. It's kind of ideal for startups, ideal for those that really need some working capital. And so the line of credit is a combination of line of credit and term loan, and the maximum term is 10 years. So you'll work with your bank and how you structure the SBA Express line of credit. You can have it structured as a line of credit for 5 years where you get, let's say you get $350,000. So it's a line of credit where you make draws and you only pay interest only each month. And so you're doing that for 5 years. And if there's a balance on that line of credit at the end of 5 years, then you're terminating it out. You're paying principal interest, over the remaining 5 years. So I think that's a good product there. And I'm going to move forward. The Community Advantage Loan Program, which, a lot of people ask me about a minority loan program. And I say, well, we don't have a minority loan program, but I think they're referring to the Community Advantage Loan Program, which essentially the target in the Community Advantage Loan Program is $250,000, comes with a 85%, 75% guarantee. And so the target is really the underserved communities, the underserved markets, which include certain communities, low to moderate income areas, empowerment zones, and hub zone, historically underutilized business zone. And it also include underserved entities, which are minority business owners, women, veteran, rural business owners, and even startup business. So if you're a startup, you're considered, underserved entity for SBA. And so this Community Advantage is an option for you.
I think we lost the sound for Rod. Okay. So we have been seeing all of the questions in the comments on Facebook Live, and I know I've been scribbling down some questions, Rod, while we figure out the sound here. You can definitely continue on. We just wanted to make sure that folks were putting those questions in. We're about to transition into Q&A, but please wrap up. I think you had a couple of more slides. Go for it.
Yeah, I think we can transition. Can you hear me?
Yep.
We can go ahead and transition now.
Okay, wonderful. All right, so I know you and I have had some really good conversations on this stuff, and you have shared some wonderful nuggets with us today. So what I wanted to do was pull out some of the key pieces that you discussed. And Kim, please do jump in. Eidl, please do jump in. So one of the things that you and I talked about previously that I want to make sure that we pull out today surrounds that EIDL advance and the EIDL grant. And I know you're already like, oh God, but I think that we have nailed down in our discussion before, I think that we've nailed down groups to try to make it easy. So what I get from what you're saying, and please do clarify for me, when it comes to the difference between an EIDL advance and an EIDL grant and what you have to pay back, I have written down that there are, in essence, 4 groups, 4 categories of business owners. Of course, you have those business owners that only got, say, the EIDL grant / advance. Whether they got denied for the full loan or they chose not to move forward with the full loan, but they got the $10,000 or the $1,000 per employee. So that's one category. Then you have a second category of people who just got the PPP, right? So they didn't get the EIDL advance or anything, just the PPP. Then we kind of transition into those categories like we talked about before that become a little bit more involved or murky, so to speak, when it comes to how you're going to do the calculations. And that is those folks who got a PPP and an EIDL, right? And an EIDL advance. All right. And then PPP and an EIDL loan. So there's 4 categories when you think about, what am I going to have to pay back? Right. And that's clarifying that EIDL advance and that grant. You think I captured that correctly, or is anything specific that we need to pull out or drill down in a little bit more with how business owners need to approach this entire discussion on PPP forgiveness?
Well, I think you know, the EIDL EIDL loan, which is a loan initially of up to $2 million for 30 years. Then, you know, you got the EIDL grant, initially a grant for 10,000, then kind of evolved into a grant for 1,000 per employee up to $10,000. And then it finally became EIDL advance. And I think that the issue that the community need to understand is that if you got an EIDL grant / advance and you did not get a PPP loan, then I think you do not have to pay. It becomes a true grant.
True grant, right.
But if you got an EIDL advance and a PPP loan, then that PPP forgiveness amount will be reduced by that EIDL advance, and that becomes a loan. Right. And so the EIDL loan, you know, up to $2 million, 30 years, that really has no bearing or no impact on the PPP loan.
Okay.
So the only bearing, yeah.
Perfect. Okay, so the other thing that that I have, this is a question from someone in my office who wanted to make sure that we clarified on the type of application that we're filling out, depending on the client's amount of PPP loan. And then this kind of touches on the interim guidance that the SBA recently released on if you got $50,000 or less. So this particular client has gotten roughly about $200,000 for the PPP loan. And so the question is, would that client, will we be able to do a 3508 EZ for that client? Is the form dependent upon the amount of the loan? Can you clarify that for us?
Well, the course 3508 is solely for $50,000 and under.
Okay.
Now, 3508 EZ, I mean, they could potentially do the 3508 EZ, you know, if they're a sole proprietor, independent contractor with no employees. So that's a box. So that's a checklist. You know, that's included as part of the instruction. So if you're a sole proprietor, independent contractor with no employees, then yes, you can use the easy form. And then there are 3 categories. If you check 1, then yes, you can use it. And the first category is being an independent contractor, sole proprietor, no employees. Then there's another category where you did not reduce your FTE or reduce your salaries or wages you know, during the covered period. Then that will make you eligible. And then that's another category where you did not reduce your salaries or wages, and you know your business was impacted by, you know, let's say the Center for Disease Control. You have some limitations in terms of, you know, the spacing and number of clients you could serve and how long you're open. So that had a negative impact. So if that's the case, then you know you'll be eligible to use the EZ form.
Perfect. So that could be corporations or restaurants or other things like that. Perfect. Thank you so much for clarifying that. I have a couple other questions, but I want to bounce it to some of our other panelists to see if you guys had any questions as well while I check my phone.
Well, I would like to, I'm sorry. There is a standout question that one of our viewers had that I think would be well served for some clarification. And that viewer wanted to know, could you please give a distinction between the EIDL loan and the PPP grant? Just to clarify that one more time.
Okay, so there's under our disaster loan program, there's a physical damage disaster loan. Okay, there's also an economic injury disaster loan, up to $2 million, 30 years. Okay, that's on the disaster side of SBA. That has no impact on PPP whatsoever. Now, the EIDL grant, that was money, I think, allocated from the CARES Act. Okay. And so if it's a grant, if you didn't get a PPP loan, then you don't have to pay it back. Okay. Now, if you got, the grant initially 10,000 evolved to a grant for 1,000 per employee, then eventually evolved to EIDL advance. And so I think the goal is, or the intent is, that the business owner is not going to get two grants. So you got an EIDL grant. Okay, that's a grant. Then you got the PPP, forgivable loan / grant. So that's grant number 2. And so I think that's where the confusion came in. Now, if you got an EIDL grant, but you didn't get a PPP loan, then that's 100% grant. But if you got an EIDL grant and you got a PPP, forgivable loan / grant, then we're gonna, reduce the PPP forgiveness by that EIDL grant. Is that kind of clear?
Mm-hmm. Yeah, Rod, I really like how you put that, the forgivable loan / grant, because that keeps coming up with True Fund clients as well. And what we always try to clarify is it is in fact a loan until you become a forgiven. At that point only, it is then a grant, because there's definitely been that confusion around at what point is it really in fact a grant, or is that a guarantee? And we try to tell our clients it's not guaranteed until we go through the various necessary stages for it to then become a grant. So I definitely love how you stated that. There's another question that has come up that I would love to hear your thoughts on, and that is, should they wait? We're getting that question every day. And I can speak from True Fund as a CDFI. We are staying in touch with our clients. So anyone that came through us to receive a PPP loan, they're getting regular communication, not only from the loan officer that they worked with, but just general communications through email, e-blast, just giving them that next step of information. And so we're not necessarily saying you should wait or you should not. And we do have some of those clients that are actively filling out their forgiveness documentation right now with us. That, of course, as a CDFI, we are then handing that off to the SBA for the forgiveness. What would be the SBA's view on, whether a client should wait or should they go ahead with that information?
Well, I think, SBA would probably say no comment, but I would say, and that's it, well, my response to that is, the lenders are actually, they're waiting. The majority of the lenders are waiting. They're waiting for another stimulus deal, as it relates to PPP and a blanket forgiveness on loans up to $150,000. That's what they're waiting on right now. And of course, a lot of lenders, they're kind of experimenting with the forgiveness platform. They're going through the process right now so they can have a better understanding of the process and how it works and if it works. And I think it's working, because there's some loans that have been forgiven. But I would say it probably would be good to wait. I know that from a lender standpoint, there's less work for the lender. Now, from the business owner standpoint, you still gonna have to go through the process of completing that information, because SBA still could potentially come to you and say, we need to review this information. And so you still will have to go through the process, as a business owner, and complete and maintain the documentation. And now how the blanket forgiveness of up to $150,000, how that would look, I don't know. It could be a one-page form where the business owner signs the form saying that, they follow the guidelines, they follow the rules, they use the money for the intended purpose, and SBA can come in at any time, request to view the documentation. And it may just be that one form signed by the borrower, and they submit that to the lender, and that may be it. So that's work for the lender. But I think waiting, we're trying to, and I don't want to speculate, because I'm down here on the front lines with you. I'm not in DC, but, I think we're trying to make the process, more simplified, or easy process for everyone involved. At the same time, maintaining a level of accountability, for the business owner. Because I want to give the lenders, I want to put them at ease, because I'm kind of concerned. I'm gonna be transparent, which I'm kind of concerned that the lenders. I mean, if we get a new stimulus deal, we get additional funding for PPP. My feeling is that some of the lenders, they're gonna step back and say, "Well, wait a minute, let's go through this forgiveness process first to see how this works out. I don't want to, make additional loans, until." Because they may say, well, I still got 1,000 PPP loans on the books. I don't want to add to that. Now, I specifically talked to one lender, and they said they weren't really thinking about it. They just think about forgiveness. And this was a credit union, smaller credit union. They had roughly 120 PPP loans. It's a small credit union, small community, and that was significant to them. 120 PPP loans, that's significant. I mean, they served their community well. And so she said, well, we don't know if there's still a need within our community because we really served our community, 120 PPP loans. And then there are some other communities that weren't served well that need additional funding. So I know I took the scenic route, but to answer your question is, the lenders they intentionally are waiting for some additional guidance from the business owner standpoint. They still need to fill that paperwork out. They have up to 10 months now. If month 11 comes around and they have not applied for forgiveness, then the bank's going to automatically term that loan out over either 24 months or 60 months. They're going to start making payments within 30 days.
Yeah. And this is within 10 months of when they were awarded, correct?
No, it's 10 months from the end of the covered period.
Right.
So the loan may be dispersed on one day. Once they get the money in their hands, they have, this covered period, this period where they have to spend the money. So we got 8 weeks, we got 24 weeks. So the end of the covered period, if it's 8 weeks, so the end of 8 weeks, they have up until 10 months to apply for forgiveness. Now, actually they have, let me correct that because I made a comment about that. They actually have from the end of the covered period, they have up until the end of the maturity of the loan to apply for forgiveness. So what that means is they still have 10 months to go to the bank to apply for forgiveness. If they don't go within 10 months, then the loan will automatically be termed out.
Okay.
In month 11. Yeah.
Yeah, I love that scenic route. And we have some other viewers that are asking some great questions, but I want us to take a different scenic route and kind of follow the money trail. So we've got a viewer that's saying, I was a 1099 employee. I fill out a Schedule C. I applied for PPP through my lender. And now the required documentation is asking for something that maybe I wasn't asked for before. And she's also stating that, I am the employee, so the money went to pay my salary. It was employee compensation, so it shouldn't matter what I spent it on. So can we follow that money trail to give the viewers a better understanding of, what is the SBA looking for? Are you looking for that the money was in fact used for the salary? Or are you looking for once it was used for the salary, what did that person then spend it on? Did they go and spend it on a computer? Did they spend it on tennis shoes? Because if it's personal salary, that could be a little bit different than what the business is spending the money on versus what the individual is spending their salary on.
Well, as long as we have documentation to show that the business provided the salary to the individual, that's what we're looking for. Now, if you're a Schedule C person and you have net income, and that money goes into your business account, now you could cut a check from the business account to pay, yourself. So that's evidence right there. If you're supposed to pay yourself $1,000 a week, so you cut a check for $1,000 week one, you get a canceled check. In week two, you cut a check for $1,000. So that's documentation. Now, what you spend the money on, I go to work, and once I get paid, my boss does not call me and ask me what I spent the money on. So as long as you have documentation that, she was paid during the covered period, I mean, that's essentially what you need. And it could be information. It could be, they may do online banking. They may transfer, $1,000 from the business account to the personal account. And so you have to provide a bank statement showing that transfer. and it has to be during the cover period.
Gotcha.
Wonderful. So Rod, a couple things also came out of our discussion, our previous discussion that I want to bring up here. And we talked about a call to action, right? We talked about, you know, how do you balance anxiety that we're getting in the comments about, like, well, when do I apply? You know, is it going to be 100%? All these other things. And we talked about a call to action, both for banks, you know, whether that be the big banks, the small banks, the minority owned banks, as well as the call to action to business owners who are receiving this information today. What are some tips that you would get, not really with your SBA hat, but just all the years of experience that you have as an underwriter, as a lender? What would be your call to action to us today?
There are a number of different things that are rolling in my head.
I know it.
Call to action in terms of PPP, or
but they should be. Well, you know what? We're talking about PPP, so we'll start with PPP. But I mean, you've shared so many nuggets in our conversations. That's very relevant as well. So.
Well, let me, you know, you use the word strategy, and I like that word. And then I added a slide about the deductibility of the expenses, you know, the forgiveness of debt. I mean, ordinarily that would trigger a tax consequence. So the IRS says that there's no tax. At the same time, you know, you can't take the deduction. Okay. So I started thinking, and I'm not an accountant. I'm not a tax advisor. And so I started thinking, and we had this conversation. I started thinking about the Schedule C individuals who report a net loss. And so that rendered them ineligible for a PPP loan. So I started thinking, you know, are we going to get a deal, a stimulus deal before the election? Are we going to get a deal even this year? And then I started thinking, okay, well, if the PPP loan, it was made in 2021. I mean, it was made in 2020, and the expenses, you know, were paid in 2020. Some loans have already been forgiven, you know, this year. Okay, we're in that process, and loans are being forgiven right now as we speak. And so I started thinking, okay, so once they start preparing their 2020, let's say Schedule C, and you got that line item, payroll costs, you got that line item, rent expense, you got the interest expense, you got the utilities. Okay, so if they spent PPP money on those items, then they can back those. They're required to not include the expense, those deductions. So I think that's going to improve their bottom line. So if you talk about strategizing, you know, let's be intentional in seeing how your bottom, as a Schedule C, seeing how your bottom line will look without those items. And we're talking, you know, 2 months, 2.5 months, you know, whatever that time period is. You got to, you know, kind of divide by 12 and take out 2 months, 2.5 months to see how that bottom line would look. And so if that bottom line becomes positive, then we get a stimulus deal. And I don't know if SBA is going to say, okay, let's calculate the 2019, you look at the 2019 income, or is it going to be like a 2020 deal? I don't know. Just depends on when, you know, we get a stimulus package, and it could be, you know, the first of the year. And so, I mean, that's a part of strategizing, you know, just kind of playing with the numbers and seeing that if you exclude those expenses, how would that impact the bottom line? And even not just limited to those items. I mean, you want to, you know, generate net income. I think the intent is like, okay, let's intentionally take these deductions to limit our tax liability. And so sometimes, you know, it's good to pay taxes, because if you exclude those expenses, you know, you're going to have a net income, then you're going to have to pay taxes, you know, at the personal level for a Schedule C. And so that's okay. You know, so I think we need to, from that standpoint, you know, need to be intentional in looking at that Schedule C, looking at the expense items to ensure that we're generating profit, you you know, in anticipation of a new PPP program being implemented, and it may be maybe next year, and then the numbers may be based on 2020.
Absolutely. And so obviously, in order to strategize, you have to have information, which is why so many people are on today. But if we had to pull a nugget that you shared with us and say, you know what, let's be intentional about it and strategic about it. If you guys don't remember anything today, remember that you have 10 months from the end of your cover period. So don't panic, don't have anxiety. You decide, does that mean that I can wait 10 months or not? Everybody's situation is definitely customized. But if you know that the guidelines allow for you 10 months or less, really we want to get close to 11 months, then what does that mean as far as reality? That means we have the fourth quarter, the remainder of the year, and then you have tax time. When it comes to our Schedule C filers, our corporation filers, all of those things. So get with someone who can help you develop your strategy. Strategy will reduce your anxiety. Talk to someone like Rod, like all of us on this panel that are experts in these areas to reduce your anxiety, so that you can properly approach your specific situation in a strategic way. Because even though it may look bleak, there are some nuggets that are still available for us as women-owned businesses, minority-owned businesses, to have that access to capital that we need to be able to not only just keep our doors open, but to be profitable going into the new year. It's very much a possibility. So we got to be strategic, use the information shared today that Rod has so generously given us. And we can do this. We can absolutely do this. There are, I saw a couple of questions about specific application sections. So we're not going to go into the specific application sections. No. However, again, if you would like a more customized consultation, then certainly reach out, because that's going to be where you find the value, because then you'll be discussing your specific business and what your strategy should be.
And let me thank you for I don't know if you're saving me, from those specific application questions.
Yeah, we're here for
that, And so one thought I had, and I don't think I shared it with you. I was thinking, okay, and I was really actually going to say this on the front end. Is like, I don't necessarily want to get bogged down into the details of calculating numbers and losing employees and salary being reduced. But, I was going to say that, I'll be open to maybe doing, say, like 3 case studies where we go through the entire process of completing the application and calculating the numbers. And so that will be the forum that we can use to help business owners get a better understanding, of the forgiveness application. And it won't be, and it's really not limited to the forgiveness. It's really the initial application for in anticipation for the next round of PPP funding.
Absolutely.
So
where we also talk about that strategy.
Yeah, absolutely. Right. And so we need to be prepared. We need to plan ahead. And I go ahead and mention this. I know you and I talked about it, but I go ahead and mention it. I know, initially, when the PPP program first started, it was on April the 3rd. And I know at the end of the day, on day one of PPP, I looked in the system just to see what kind of loans were being made. And I came across a bank in the Midwest, and they did 200 PPP loans on day one. And so there was some anticipation, there was some preparation.
Yes.
And so I think they served their client. And it wasn't a big bank. And so I think they served their client. They served their community. I don't want to say clients, because that kind of denotes internal. They're just working with and it could have been their clients. But I think they served their community well. And so I think, we need to plan ahead, with the the minority banks, and banks in general, because money is green, and they make money by lending money. That's the biggest source of interest. I mean, they can invest it. It's going to be a lower return, so they can make loans, and that's where they get the bulk of their income, the interest income. And so they want to lend the money, and so I think we have to be intentional on in preparing ourselves. It's been my desire, and as you mentioned, I worked as a commercial underwriter, but it's been my desire to say, and I still have these thoughts about every business owner. They should be able to underwrite their own loan request. And when they go into the bank, they tell the bank what they want. Okay, I want this loan. I want it, amortized over 20 years at this interest rate. And, I'm not going to make any payments, for 90 days. And then after 90 days, I start making principal interest payments over 20 years. And if you have any questions, here's my cell phone number, call me. I mean, we need to go in there, but that requires knowledge and understanding.
They got the best team right here. I mean, they got the federal government on the line. You've got your accountants. You've got Ignite, bringing everybody together. You've got your business advocate. We've got some dollars for you whenever you need, when you're ready to sell. So